Hello, everyone. I am David Gutierrez, the marketing coordinator here at Founders First Capital Partners, and we welcome you to our webinar, The Power of Collaboration, Fueling Impact Through Partnerships Between Impact Lenders and Financial Brokers. The Founders First Capital Partners team will explore the transformative potential of collaborations between impact lenders and financial brokers. Join us as we highlight the benefits of these partnerships, showcase success stories, and present a collaborative roadmap for brokers interested in joining our mission toward a more inclusive economy. As for today, we have two members from the Founders First team who are going to dive into the topic of collaboration. We have Tracy Fuga from the Business Development and Marketing team, and we have Kush Kakaya from the Business Development team as well. I'll hand it off to Tracy. She'll give a bit more background, same with Kush, and then we'll get started with the webinar. Tracy, the floor is yours.
Hello, good afternoon, everyone. My name is Tracy Fuga. I'm on the Business Development and Marketing team here at Founders First Capital Partners, and excited to talk to you all today about partnerships and collaboration. I've been lucky to meet a number of you through our membership with AACFB and sponsoring the event with them earlier this year, and I look forward to meeting more of you soon. Kush?
Wonderful. Thank you, Tracy. Hi, everyone. My name is Kush Kakaya. As David had mentioned, I am the Business Development Officer here at Founders First. I've been with the company for about 3 years and really kind of focus on sourcing companies that are specifically within the SaaS and tech industry. But obviously, as Tracy had mentioned, had the fortune of being able to meet a lot of you guys through the AACFB conference and NACLB as well. So looking forward to seeing what amazing opportunities and partnerships can come out of this webinar.
Before I get started, I just want to remind everyone we'll have some time at the end for a Q&A session. So for any questions, feel free to leave them in the chat. And then for those attending, we will be sending out the slides after the webinar as well, so you have access to all of this information. And with that, we'll get started.
Awesome. Well, firstly, just wanted to give you guys a little bit of a context on Founders First. We've been around for about 8 years now, and really what we specialize in is really being a true mission-driven impact fund. What our mission is trying to do is really just trying to solve some of the racial and socioeconomic gaps that we've been seeing within this industry and for a lot of underrepresented and minority founders. So really how we're doing that is not only by providing capital and really, really flexible capital, but also the wraparound services and mentorship opportunities that we can have and that we can offer to the companies that we fund, along with other companies that go through our accelerator programs. Typically, the companies that we do serve at a very high level are only B2B diverse-led businesses with annual revenues that are actually from $500K to $10 million. So there's a little typo on that, but it is $500K to $10 million in terms of annual revenue. And those are the types of companies that we typically like to see. And we'll be going through a lot more specifics on what types of businesses work best for our funding products. As you guys can see here, these are just a few of our statistics that we have. We always like to showcase these. These are, very, very, very proud of the work that we've been able to do in the communities that we serve. As you guys can see, we've been able to service around 1,400 plus companies. And really have, these statistics here just show the impact that we have had with the companies that we have not only funded, but also that have gone through our accelerator programs and various different advisory services as well. So I'm going to address this to Tracy. What is impact lending?
Thanks, Kush. So as Kush was just telling all of you, at Founders First, we're really on a mission to help diverse-led businesses. And we do that through impact lending, which is really an investment of capital made with the intention to help generate, positive and measurable, specifically, impact in local communities that also includes that financial return. So we want to do good in communities and for people that have been underserved, historically for a lot of different reasons that, I won't get into. But so at Founders First specifically, we provide access to that critical growth capital that diverse-led businesses need to help really unlock their economic potential and get their businesses elevated to the next level. So we're a non-bank lender, and we're investor backed. So we're backed by some really huge foundations and family offices that believe in our mission and have given us the funds to help really these businesses grow. And so we're doing that by, giving them the growth capital, encouraging them to create premium wage jobs, to grow their business, and we offer some advisory services and things that we'll talk about later in the webinar. But it's really all about empowering those underrepresented businesses and to move towards a more inclusive economy. So Kush, why don't you kind of go over the financial products that we offer for those diverse businesses, and how we can help brokers identify the clients that would work best for our products.
Definitely. Awesome. So, one of the, for Founders First, what we offer in terms of financing products, we have two main products: our simple term loan, along with also our kind of bread and butter, which is true revenue-based financing loans that we provide. So as you guys can see on the left-hand side, we have some of the business characteristics that our underwriting team has specifically kind of sectioned off for us and kind of identified what different types of businesses would qualify for us. As you guys can see, the diversity element that we require is very, very broad. And we've done that intentionally so that we can capture a very large group of people. Obviously, we would like to see companies that are profitable. However, we have worked with companies that are, break even or have a very, very clear path to profitability. One of the reasons why we look for B2B and why we only provide capital to B2B companies is because our revenue-based financing model relies really, really heavily on growing recurring revenue on a month-to-month basis. So any of your companies, such as, let's say, a SaaS company, for instance, that has monthly subscriptions, that's something that we like to see because it's consistent revenue month over month. And that's something that we really, really like to see from an underwriting perspective. Then in terms of time of business, we like to see at least a company have 12 months of historical financials that we can take a look at and be able to underwrite from. In terms of our term loans and our revenue-based financing loans, our term lengths can be anywhere from 12 months or 2 years to 5 years. And in terms of our funding amounts that we can do, we can go anywhere as low as $50K and we can go up to $2 million, with the exception that the first tranche is capped at $1 million and we can provide follow-on funding going up to $2 million. And one of the really interesting things that a lot of entrepreneurs and small business owners, one of the reasons why they like coming to us is for a few different reasons. One of the reasons that I have personally seen and that I think is really, really big is the fact that the companies don't have to we don't collateralize any of the assets in the business. On top of that, because we are a debt provider, there is no ownership, or all of the ownership is going to be retained within the company. We're not going to be diluting that by any chance or by any opportunity. And also, really, what we are trying to do is trying to make sure that we have our aligned interests and our interests are aligned. So the last thing that we want to do is provide capital to a company where it's not going to be used as an instrument for growth, but rather a kind of like a hindrance to their growth. So we really want to make sure that we do everything in our due diligence and underwriting process to make sure that we can work with these companies and that, the growth capital that we are going to be able, or potentially going to be able to deploy, will actually help them short-term and especially long-term. You can go to the next slide. And in terms of our excluded industries that we have, we can, as you guys can see here, cannabis or the marijuana industry, that's something that we cannot work with. Anything related to weapons manufacturing, distribution, that's something that our investors have said that we are not allowed to provide capital for. Anything gambling related, so this also includes online sports betting companies as well. Liquor is a really interesting one in that sense. What our requirements are is that we cannot provide capital to companies that revolve around liquor sales. So that would be your bars, nightclubs, lounges, or restaurants as well, for that matter, because there's no recurring element to their revenue. And lastly, nonprofits are something that we cannot fund. Now, with that being said, what are we looking for? B2B is a very, very large scope. There's a lot of different companies and different products and services that are offered. Really, what we are trying to look for and what works best for us is very asset-light, service-based businesses. So additionally, what we are looking for, as I mentioned with the recurring revenue aspect, what we are trying to see is we're just trying to see long-term contracts and commitments with the companies that we are potentially going to be funding. So a lot of SaaS companies work really, really well for us. We funded a decent amount of tech-enabled and tech solution companies due to that recurring revenue element of it. Consulting agencies also work really, really well for us because of that higher margin that typically is in the 60 plus range. So that's something that we really, really like. And obviously, more than happy to go through some of the individual cases that you guys have after this call. And I'll pass it on to Tracy.
All right. So I think it really helps illustrate the financing that we're able to option by just giving an example and a breakdown of how the loan is distributed, how we kind of come up with the repayment amount, and what that repayment looks like. So we're able to, as Kush said, loan up to $2 million with $1 million in the first tranche, and then up to $2 million, including those follow-on fundings. Or we're looking at about 30% of that annualized revenue run rate. The great thing is that we don't have, a set interest rate or a set monthly payment or maturity level for a revenue-based financing facility. Those monthly payments are variable, right? So it's a fixed percentage of the revenue. So we utilize a multiplier. In the example that you see on the screen, we have a 1.3 times multiplier. So when you get that financing from us, if you're getting a $200,000 loan, the entire repayment is going to be $260,000. That's very transparent. It's not like, oh, it'll be around this or something like that. We are very transparent in the total amount that will be repaid, and there's no penalty if that's paid off early. So what that $260,000 repayment looks like is around 2 to 5% of the monthly revenue. So that's going to go, up and down with the revenues. So if one month there's, you get a lot of money in, that repayment goes up to kind of go with that increase in the revenue. And then if we go to the next slide, we'll see that that example with term loans, where it's the same, same criteria, that up to 2 million or that up to 30% annualized revenue run rate. But instead of that variable repayment, it's going to be a fixed amount. So that's going to be, $7,222 per month. So some clients, they prefer to know their set payment amount, whereas others like that variable amount that goes up and down if they have, seasonal business, or they have certain clients that pay, more in certain times of year and things like that. And then as well, there's no penalty if it's paid off early. We have that repayment amount set for a reason. So if something happens, say an SBA loan gets approved, and again, we can actually come in behind an SBA loan. But say you were working towards cleaning up your finances, you got a loan with us, and then your client gets approved for an SBA loan, they can repay that facility with us without any penalty, because it's that set amount, like we said. So Kush, why don't you talk about why broker partnerships matter for us at Founders First?
Definitely. Yeah. And so, a lot of what we do is, we rely heavily on, you guys, you brokers just being able to work with us and being able to refer clients over to us. And so we take that very, very seriously here at Founders First. Some of the reasons why, a partnership with us could work really, really well is, the opportunity to just be able to fund your clients with different types of favorable debt options. There's multiple different types of, speaking engagements and webinars that we host, or maybe that you guys might host. And we'd love to be able to, be a mutually beneficial asset for you guys to be able to either offer to your clients or even to help your guys' individual brokerage firm. And really what we are trying to do here is really just trying to foster and develop and cultivate these wonderful partnerships. I know that that's a solid 50% of my job, and I have a great list of brokers that I work with who, honestly, I love having those calls with them. We just get to chat, catch up, and hopefully be able to fund some of the companies that you guys work with. And some of the ways in which that we really value broker relationships is having calls to check up on current clients that you guys have, even updates regarding new offerings that you guys have. That's something that really, really works for us, because if we don't have the capability to be able to fund a company, we want to be able to make sure that we can refer them out to either a lender who can work with them or a broker who has access to a lender. So this is something that we love doing. We want to, as I mentioned, we want to make sure that this is a very mutually beneficial relationship. And also the last thing with it is really just increasing your network, and us increasing our network as well. There's so many amazing providers out there, and being able to have access to multiple different alternative, traditional, or even equity partners is something that we really, really value here at Founders First. So Tracy, how does a partnership with Founders First look like?
Thanks, Kush. So, as Kush was just talking about, we really like to foster relationships and partnerships with brokers, and we do that by first having that initial phone call with you, kind of learning more about the clients that you service and how we could potentially fit in with that, and if we can't, how we can assist. So if all of that sounds good to you, then we send you our broker agreement, and then we'll also share with you the financial templates that we would need from your clients for those discovery docs to get that initial conversation started for funding. And we do things a little bit differently here. We have a very bespoke underwriting process where we look at things and clients very individually. And we really dive into those financial documents. So what we're going to look for is going to be really simple of 24 months of like a P&L, balance sheet, and cash flows, as well as customer revenue by customer. Because we're looking at recurring revenue, it's really important to see how much revenue your clients are getting from each customer. If it's a huge amount from one customer, that might look a little, risky for us, because if that client potentially loses their customer, then they lose a big chunk of their revenue. So that's why we're looking at those financial documents. I know it's a little different than what a lot of your other lenders are going to ask for, which is why we provide those financial templates. As well, we'll add you to a contact list. We try not to email too often, but we'll include you in. We have a really, I'm going to say, amazing monthly newsletter that I put together that we share, pertinent information, recent deals that we funded, talking about, the financial products we offer, and helping remind you of the criteria that we're looking for. So we do that on a monthly basis. And then we'll also, send some check-in emails every once in a while. Again, we really try not to bog you down with too many emails. I'm sure you get plenty already. And then we will schedule, some recurring communication with you just to make sure that we're staying top of mind, as well as, give you the opportunity to catch up and let us know any new clients that you might have, or a client that's potentially ready to talk financing with us. And then if you have a client that doesn't work for us, we'll help direct, some resources or maybe some other connections or networks for someone that can. Kush, why don't you go ahead and give kind of an example of a really great broker relationship that we have?
Definitely. So this is actually, this is modeled off of, some of the one particular broker that, I believe he has now sent over 2 deals to us recently. So he's just been, an absolute rock star for us. One of the things that we've done to really kind of get to that point of being able to have great communication is really just scheduling recurring meetings. I believe with this particular broker that we have, It's every Thursdays and Fridays that we have just quick check-in calls, typically anywhere from 5 to 10 minutes long. They're nothing too crazy. And essentially what we do during those calls is just review the pipeline of deals that he has. It's very informal. We try to make it, as flexible as we can. We also recognize that you guys have very, very busy schedules. So even if this is something like either if it's not a call, maybe just a weekly email or something like that, that works well. I personally like to have phone calls with all the brokers that I work with just to get a much more of a personal touch. And also, what we do because of as I've mentioned a couple of times, we want to make sure that this is very mutually beneficial. So spotlighting this particular broker was something that we've done to get him to get some more referrals in from our end. And then also what we've done is, the more that we work with a broker, we feel like it is only necessary to be able to increase the commission cap that we have for recurring referrals. So that's something that we're very open to and we're very flexible with going forward. And what benefits, let's see, I think this is mine actually.
What benefits and support does Founders First offer beyond just a loan disbursement to our broker clients?
Definitely. So I did mention, so one of the things that some of the things that we offer, at least to companies for the wraparound services, is one of the things that we do is an expansion advisory product. So these are for companies that have been funded through Founders First. And what we do is we match them with an advisor that we have on our end that is ideally closer to, has industry knowledge with the specific segment or industry that the company is working in. And essentially they are able to have this either weekly or monthly communication with this advisor to help them facilitate this growth with this additional capital that they have. So that's one of our product offerings that we have. Additionally, we have various different regional and national grants that micro grants that we can deploy out and that we can offer to some of the companies that are not only funded by us or maybe some companies that are in our mailing list. So always be on the lookout for that. And lastly, one of the biggest things that we offer is on our nonprofit side is our business accelerator programs and leadership programs that we offer. So we've actually tailored 3 different business accelerator programs that are specific to the annual revenue size and that your company or your clients are in. And this is essentially what we are hoping to do, and we've had a lot of track record in doing so, is being able to really help them scale their revenue by 43 to 50% within a year of graduating through from these programs. So we segment them based off of I believe it's 50 to 100K in terms of annual revenue. That's our challenge program. Then for companies that are doing 250 to 750K, that is our bootcamp program. And then companies that are doing $1 million plus in annual revenue have access to our fast path program. So all of the content that we have is specifically structured to identify different problems and provide solutions to companies that are in those buckets. And so these are all of the other wraparound services that we offer to companies that are in our network. Wonderful. Tracy, can you explain our typical time frame for approval and funding when utilizing alternative financing, and specifically us at Founders First?
Yeah, so on average, it takes from initial conversation with a broker about your client to funding roughly 30 days. And that can actually be significantly faster if the client has either QuickBooks Online, because we have an API integration with Kodat with that, where we can pull the reporting we need directly without obviously writing back to that system. And that helps definitely expedite things. Or if their financials are just in good shape to begin with, even if they're using a different kind of accounting software, they have an in-house CFO or a CPA or what have you that can pull those documents. As well, just ensuring that you and your clients are super responsive, that obviously speed things along. Because, the longer time between communication, obviously the longer it takes to fund. So if we're reaching out and asking for something and it takes you a week to get back to us, well, obviously that pushes the funding out another week. So we've been able to fund a company within it was about a 2 week time frame from conversation to funding, and that's because they were super responsive. They had all their financial documents in order, and we were able to get that funding super quickly. As well, if your clients don't have their financials in order, things are a little bit of a mess. We can actually refer them to a partner of ours called Terra Business Solutions, and they have a My Boss assessment, and they can help them get their financials to a place where they're ready for funding. So that's something that we can offer your clients as well, just as kind of an added bonus.
All right. Thank you so much, Tracy and Kush, for all that valuable information. We did have a few questions come in, so we'll start the Q&A session. Um, for the first question, what are some insights or lessons you've gained from facilitating broker relationships at Founders First? And either Tracy or Kush can answer this.
Sure. Um, One insight that I've gained is honestly having like communication is a solid 60% of this entire thing. Making sure that I've, in working with Founders First in this capacity, I have, some of the, at least for the example that I provided for our, exemplary partner, really getting to the point where we are having just very casual check-ins is something that I thought really, really helped me in terms of my broker relationships that I worked with. Obviously, there's so many things that happen throughout the week, and we have so many different and conflicting schedules, especially when you factor in personal life. But I think that having that consistent communication every single week has been really, really valuable for me, not only in my own relationships with the brokers, but also with the clients that they serve and the clients that you all serve. At the end of the day, I know that you guys are working for your clients and really want your clients to be, have the best options available. And so that's one thing that I thought was really, really valuable, is making sure that we have consistent communication week over week.
Yeah, I definitely agree. And I think as well, connecting over LinkedIn too, and just being able to see, when you're sharing things on your LinkedIn, a lot of the brokers that I work with are very active on LinkedIn. It highlights to me like, oh, they're moving into another sector or they have something going on. They just hired someone on their team. Let me just reach out. So I think just staying connected in a lot of ways and just keeping the lines of communication open is really beneficial for those broker relationships.
All right, perfect. And then for one last question, where can someone access resources or tools regarding our broker relationships at Founders First?
Yeah, so I mean, we share a lot of that through emails as well. We have a partner page on the website, and I'm always happy to share any other resources that I have. If someone reaches out to me individually, I think you're going to share our contact information as well. Kush, I don't know if you have anything else to add.
No, pretty much the exact same thing. Yeah, just trying to make sure that we get the visibility on our website, our newsletters as well. So that's all. That's all. I think you covered it.
So with that, ready to partner with Founders First Capital Partners? Here we have the contact information for both Tracy and Kush. You can reach out to them via phone number or email. Just a reminder for those who have attended this webinar, you'll be receiving these slides, so don't worry if you can't jot everything down. You'll be able to access all the information here, as well as our contact information to reach out to both Tracy or Kush for more information regarding our broker partnerships. As well, you can visit our website, foundersfirstcapitalpartners.com, for more information. And then we also have a partner page on there as well. I can give you some more background on how that looks like and what we can offer for brokers. And with that, that is the end of our webinar. Thank you again to everyone who attended. We hope that you learn more about the power of partnerships and what we can offer brokers here at Founders First Capital Partners. Um, stay, just keep an eye out for the upcoming email with all the webinar slides. They'll be delivered shortly. And with that, we'll see you next time. Thank you again.
Thank you, everyone.
Thank you.